Hey guys, Mike here. So, oh boy, the job report hit this morning, non-farm payrolls, and the market immediately fell off a cliff. And so we're going to get into that, and I'm going to break it down in the simplest terms. That's the way I like things broken down to me, of how this was supposed to affect the market, right? But when you look at it, did it really affect the market? Because the market went from deep red to green, red to green, back to red, barely red, and then like some of the indexes actually ended up green for the day. Like it didn't even affect it for some reason, right? And I say that because remember what the narrative is. The narrative is the reason why this rally triggered in June was because the recession risks were all high and stuff. And that means if the recession risks are high, the Fed's going to have to pivot, so they won't raise rates anymore. And also they'll pivot and drop the rates come early 2023, between like April and June sometimes was the forecast, I believe. And so that was the whole thing. Oh, great. And then what'd you see? You saw the 10-year yields, all the yields just fall off a cliff, right? And so boom, risk on, right? But this job report comes out and it shows the opposite, right? This huge, we created all these jobs, way more than what people thought. And I'm gonna show you that. We dropped the unemployment rate from 3.6 to 3.5. We revised up June numbers. So that's a pretty dang strong, right, labor market, right? I mean, so people are still hiring. And then on top of that, which I'll show you, and we'll talk about why this is happening, nominal wages went up again, which is none of this the Fed wants. They want the unemployment rate to start going up, and they want wages to come down and stabilize, right? Why? Because, in the simplest terms, if you have a lot more money, right, and people are working and the unemployment keeps coming down and wages keep going up, that means demand is up here. It's not, as a matter of fact, not only is demand not coming down, it might be going up, right? And so what is that going to do for inflation? Because supply ain't getting any better. It's going to keep it high. Right? It may peak out up here, but it's going to keep it high for a long time because what is the most expensive thing for a company? Employee wages, right? Which means what do they have to do to offset those increased wages? They have to increase prices, right? Not just for and then also if inflation stays here and those input costs stay up, they have to increase prices even more to offset the wages and the other input costs they're having for the goods and services, right? And so that report today should have been like a just cut your legs out from underneath the market report. But the market was like, we're red a little bit. You know, QQQ, NASDAQ was down a little bit. But no, it fought a ways back. And on top of that, you had high growth stocks, right? Up 10, 20% today, right? And I don't understand. I mean, I'm straight up about this. You know, I'm in the market, so I'm good to see green. But what I'm confused, and I think a lot of people are trying to figure out what's going on with this market because you got Chinese IPOs coming out now all week. One came out today, IPO for $7, went to $180 within like 5 hours. I don't know what percentage that is. It's a lot. Yeah, the other one that went all the way up to $2,500 from $4 in like 2 weeks. And I guess there's some more lined up to come on. I don't know which ones they are, but I've heard about them. And so you got that happening. Then today was meme stock mania. We had 3 of them, right? That come out, and I'm going to read you one of these because it's an absolute joke to me. All right, I'm not investing in this stock. Congratulations if you are. I am very happy for you. But I'm going to read it to you, and you tell me, should this stock be going up or down? And see if you can guess the stock and put it in the comments for me. Because this is what's confusing a lot of people. It confuses me. I mean, I get the missed economic data. But the fact we're back in meme stock mania and this Chinese IPO thing that's going on with all this stuff is just starting to sound insane. And I'm seeing it all over Twitter right now. I get it popping up my feed. People are going meme stock mania, right, is what they're doing right now. And it's kind of weird. You think, well, we were really risk off, but now we're really, really risk on. And I'm just going to read this to you real quick, and then we're going to get into why the jobs report was so important. And we'll see what it affects next week, obviously. But I'm going to really show you the important part and why certain things are happening. But check this out right here. So this company is soaring today after the company released its second quarter financial results. Although the company missed Wall Street's consensus estimates for both its top and its bottom line, investors seem to be focusing on its progress and cutting costs. And what they mean by that is they laid off 12% of their workforce so far this year. And they're in a competitive industry, okay? And it's supposed to be growing rapidly, but it's kind of hard to grow when you're laying off 12% of your workforce right now, and maybe more to come. And so, but not only did they miss top and bottom line, let's go ahead and get into it. The revenue increased by 16% year over year. Way to go there. $3.8 billion, but fell below the average estimate of $3.9 billion. And this is even better. The company's adjusted loss of $2.35 per share in the quarter, that's a loss, was also worse than the Wall Street expectation of a loss of $1.79. Not even close, okay? Gets better though, and below the company's earnings per share of 26 cents in a year ago quarter. This is fantastic. Don't worry, it gets better. To that end, let me see. Oh yeah. No, hold on a second. Oh yes. Investors were also happy to see the company's net losses narrow sequentially to $439 million in the second quarter. $439 million loss. Down, hey, this is good news, from $506 million loss in the first quarter. And so you got to ask yourself, should the stock be up or down? And the question is, it should be down, but the stock is Carvana and it's up 40% today. And it's up over 63% in the last 2 days. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And so now that leads us into what is going on with this job reports and why should we be paying attention to this, and why is the Fed, I don't know how the Fed can possibly be happy right now, sitting there going, wow, we have literally done nothing to affect demand at all, right? And, you know, which is what they're trying to do. And if you just look, here's the non-farm payrolls, boom. I mean, you know, just spiked up huge. We end up increasing June's, by the way, as well. On top of that, average hourly earnings for all private industries. I don't know about you, but that looks like it's trending up to me since April right there. And you can see it right here, nominal wage growth. I'm not sure, but that seems to be trending up as we can see. And if you look, why is nominal wage growth going up? Remember, real wages are going down because of inflation. The reason why this is going up is because before the pandemic, you had 63.4% participating, and then right after the crash, you had 60%. But now you have 62.1. So we have 3.4 million workers missing, not participating. So you have less workers looking for jobs. And just to give you another visual, you can see right here what I'm talking about from Fred itself, labor force participation rate going down. And on top of that, what else is going on? Job openings are shrinking. They're going away. You've heard about that multiple times. And so you have less workers looking for the jobs, less jobs out there to look for. So what these companies have to do to attract the workers to get them back in? They're having to raise wages, give them bonuses, all that fun stuff, okay? Which, of course, what's that do? It's great, by the way. Congratulations if you're one of those people. It's wonderful. But like I said, what's good for you isn't good for the stock market. And why is that sometimes? Because what's the biggest expense for companies? Their employees, right? So if wages just continue to go up, what do they got to do? They have to raise prices, all right, to offset that. And of course, with people making good money, that means demand stays high, right, for goods and services, things like that. And so if input costs for those companies, even if they just tap out or peak out right here, but they stay there for a long time, they still got to keep their prices high, and then they got to keep increasing those prices, as you've heard on the earnings calls. I mean, like Chipotle said, and they were giddy. Oh yeah, we're increasing prices again this month, and other companies have said the same thing, right? And grocers said the same thing. They see high inflation going on for a long time because they're having to pay the workers a lot more money to get them in there to stock those shelves. Okay, that's where the problem comes. So you don't have price stability. That's what they're talking about. It just keeps going up and up and up. You got to have price stability to have a functioning, long-lasting economy. So you're not doing this right here. And so, that's the simplest version I would put out there. And, the prime example I'm talking about here, as far as like how prices coming down, people expect it to fall off a cliff and all this stuff, and I'm just laughing at that, is because look at gas. Gas will go down to $4, I think, within the next week, right? So let's say it is $4. It was $5. That was the national average. So, rough math was a 20% drop over the last, let's say, month. But when did oil drop? Oil dropped like months ago from 140 down to 90, right? So oil, what is oil down now? Like I think it's in $84 a barrel in the U.S. So it's down like, close to 38%, 40%. So it's down 30 to 40%, but gas is just getting down to where it's almost down 20%. Why? Because it has a lot of levels it has to get through, from suppliers to distributors, all that stuff, before it hits the gas stations to us. It's no different with food. It's no different with food. That's the way it is. So it's going to be a long time for you to see grocery prices to get back down to where, if they even ever get there, to where we used to pay for them, right? And so, getting back to the stock market, obviously, things where you think the stock market would be just in the toilet today after seeing that report, because it means the Fed, which is why you saw yields jump. I don't know if you saw the 10-year yield jump today, but it jumped way up the last couple of days because what happened? Now they're like, man, the Fed is going to have to do more work. Now they're pricing in a 75 basis point hike in September. And maybe the pivot didn't come in when they said it was. Maybe that's going to get pushed back, And so that's just this game that's being played, this game of manipulation, but it's keeping a lot of people on the sidelines as well because they don't know what the heck's going on. Again, like look at gold. Like gold is going up. Gold is more of what people consider a safe haven, and that's going up right now, right? So it's like, wait a minute, what the heck? And so it's just a mixed bag of, I call it a mess right now, what's going on in the market. I mean, so many, we got to see what's happening because so many, like the QQQ is sitting there at that point where it's either going to break out of this descending channel or it's not. Didn't do it today, obviously, because it was down a little bit. But, all these different like trend lines and resistance levels are sitting there. All this data is flying out. We get CPI next week. I think it's Wednesday, I believe. And so that's going to be interesting to see where that goes. And the truth is, I mean, you got to think, if it don't go higher and it just peaks, or it comes down, because it's going to be fun to see. Are people going to look at the year over year, which I find to be garbage, to be honest with you? Who cares about year over year? It's month over month. That's what I want to see. If month over month is increasing, but year over year decreases, what's the market going to do with that? It's still going to have the momentum. And you see where the VIX is at. The VIX is like just broke that trend line. It's been on for a while. It's down about 21. And so, there's definitely complacency there, high risk going on, meme stock mania, Chinese IPOs running amok, all kinds of stuff. Crypto's still going, And so but then meanwhile, gold's going too. So I don't know. It's interesting. I don't know what to make of it. Let me know in the comments what you think and stuff. And so, that's what I got for you today to catch you up on what's going on. And I'll end up seeing you guys Sunday. So have a good one.